Welcome to Iraqi Dinar RV, unpacking the truth behind currency revaluation hype. In today's complex financial landscape, it's easy to get lost in the noise. Social media channels, forums, and influencer platforms are filled with bold claims and viral narratives, especially around the topic of foreign currency revaluation, commonly referred to as an RV. At Iraqi Dinar RV, we aim to rise above the noise and bring you facts, analysis, and grounded economic insight. One of the most talked about currency plays in speculative circles is the idea that the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, are poised for an overnight surge in value. Some claim this shift could create instant millionaires out of everyday people who hold these currencies. The premise is appealing. Buy a large sum of foreign currency now, and when it revalues, cash in for a life-changing payout. But how realistic is this scenario? Can currencies really jump in value overnight by hundreds or even thousands of %? Let's dig deeper into the reality versus the fantasy. The dream, a quick route to generational wealth. The appeal of the revaluation concept lies in its simplicity and promise. For example, many speculate that you can buy 10 million Iraqi dinars today for around $8,500, including dealer premiums. Then, once the currency revalues to a 1-to-1 exchange rate with the US dollar, that same investment could allegedly be worth $10 million. It sounds like a once-in-a-lifetime opportunity. Influencers create videos and blog posts with insider tips, some even claiming to have government contacts or confidential intel. But despite the impressive packaging, there's one critical ingredient missing from most of these stories: evidence grounded in economic reality. The economic mechanics behind currency valuation. Foreign currency values are determined by complex factors, including monetary policy, inflation rates, trade balances, economic growth, and geopolitical stability. Central banks, like Iraq's central bank, don't simply announce revaluations without careful planning, coordination with global partners, and a strong economic foundation. An abrupt, extreme revaluation, such as moving from 1,300 IQD per USD to 1 IQD per USD, would require a complete transformation of Iraq's economy, global debt restructuring, and political stability that currently doesn't exist. It would also disrupt international trade agreements, shock currency markets, and likely trigger global economic instability. In reality, revaluations, if they occur, are gradual, measured, and coordinated with broader monetary policy objectives. The idea of a surprise overnight windfall from a currency like IQD or VND has little precedent in modern history. A more realistic scenario: modest appreciation over time. That said, a more conservative, yet still optimistic outlook might suggest the IQD could appreciate in value gradually. Some experts speculate that if Iraq stabilizes politically and economically over the coming years, the dinar could reach an exchange rate of around $0.10 per IQD. Let's say you purchase 10 million IQD for $8,500. If the currency appreciates to $0.10, your gross return would be about $1 million before taxes and fees. This is a far cry from the $10 million figure often touted online, but it still represents a substantial return, provided it actually happens. And importantly, such a shift would likely unfold over time, with incremental adjustments on the Central Bank of Iraq, not through a surprise announcement. Hidden costs, taxes, fees, and exchange spreads. Many people excited by the RV narrative forget to factor in the costs associated with foreign currency investments. 1. Taxes. Any profit made from a revaluation of a foreign currency is subject to U.S. taxation. Depending on how long you held the currency, Gains could be taxed as ordinary income or capital gains, with rates ranging from 24% to 37% federally. Add state income taxes, typically 0 to 10%, and you could be looking at a 32 to 40% total tax bill. Using our $1 million example, that's $100,000 to $400,000 in taxes. 2. Exchange fees and spreads. Currency dealers often charge transaction fees of 1% to 5%. Additionally, speculative currencies like IQD usually have a wide spread between buy and sell rates. This slippage, along with administrative costs or processing delays, can eat into profits by tens of thousands of dollars. So from a gross $1 million return, you might realistically net closer to $600,000 to $650,000 after all deductions are considered. The risk of scams and false promises. Unfortunately, the RV space is a prime target for scams. Unscrupulous dealers may promise VIP exchange rates, charge hefty upfront fees, or collect personal information under false pretenses. Some schemes even promote fictional government programs or restricted insider opportunities. In many cases, these operations are unregulated and prey on individuals seeking financial freedom without fully understanding the risks. It's essential to do your own due diligence and work only with licensed professionals and verified institutions. The bottom line: hope isn't a strategy. There's nothing inherently wrong with holding a small amount of foreign currency as a long-term speculative play, as long as you understand the risks and manage your expectations. True financial success comes from education, planning, and diversification, not from betting everything on a single high-risk asset. Smart investors work with licensed CPAs, financial planners, and tax professionals. Develop clear exit strategies. Diversify their portfolios beyond speculative currency plays. Stay informed by tracking macroeconomic trends rather than chasing internet rumors. Final thoughts: stay grounded, stay informed. The idea of a currency revaluation producing instant millionaires is a seductive one, but it's rarely grounded in economic facts. While some degree of currency appreciation is possible in the future, it is likely to be slow, measured, and tied to Iraq's broader political and economic development, not a secret overnight switch. Whether you're already invested in IQD or VND or just starting to explore the space, remember that real wealth is built on knowledge, discipline, and prudent decision-making. Disclaimer: this article is intended for educational purposes only and does not constitute financial, legal, or tax advice. The foreign exchange market is inherently risky and prone to misinformation. Consult with qualified professionals before making any investment decision. Iraqi Dinar RV is not liable for any losses or damages resulting from the use or reliance on this content.